All right, everybody. Well, if you have never been to a Pro Spotlight, first of all, I want to welcome you to our Pro Spotlight webinar. These webinars are hosted by me, Casey Taylor. I'm a customer training specialist here at JobTread, and it is my opportunity and my great privilege to be able to bring in people who presented at last year's or the beginning of this year, January, sort of in reference to the previous year's work that has been done all across your company, all across our software. We have a conference every January. So we just had our 2026 Connect conference, and we had some incredible breakout session speakers. And we have tried to give you the opportunity, whether you were able to come or weren't able to come, to be able to learn from the users that shared at that Connect conference. So this is your opportunity to get to learn from today's presenter, who I will introduce you to. But I just might say that this is one of the things that really sets JobTread apart. We just went to IBS. We got a chance to really get to meet a lot of great people across other software companies who are really working hard trying to do the work that they do. But in addition to what I think is a more robust software, I would say one of the things that really makes JobTread stand out is the community of construction people, the businesses that we serve, who are so willing to share with one another templates, ideas, concepts, meetups that happen all over the globe so that you guys can all learn from one another, not just about JobTread, but how you can do better business so that you can serve your customers in your areas in a better way. And so I want to just thank you guys for how you invest in one another. And I want to thank our Pro Spotlight speaker today, who, again, as I said, I'll introduce you to. But I think this is what makes JobTread really stand out as the best construction management solution on the market. And so Erin Andrews is one of the owners for Level Accounting and Advisory out of Vero Beach, Florida. Level Accounting have been with us at JobTread since December of 2023, and we're excited to say they are marketplace accounting partners of ours. I'll actually put the link to their accounting link there in the chat here in just a second. But I want to make sure that you check out their marketplace tile, and we're excited that Erin has agreed to jump into the spotlight to share with us today. But before we turn it over to Erin, let me just sort of set some ground rules so that everybody understands how these work. We have two communication boxes in these Zoom chats, in these Zoom webinars. One is going to be the actual chat box. That's going to be where you make comments, where you make observations, just like you did whenever you were asking about the hat melody. Or anybody telling us where you're from. If you would like to make a comment on anything that Erin shared, or even crosstalk with one another, that's where you're going to do that. She might engage you and ask for some responses as she goes through her presentation. That's where you're going to put comments like those, okay? We also have a Q&A box at the bottom of that row of icons. You're going to see a Q&A box. That box uniquely will be for any questions that you would like for me to throw out to Erin at the end of our webinar, when we will have the Q&A section of the Pro Spotlight. So try not to ask questions in that chat box. If you do, I'll give you a nice little friendly digital slap on the hand and remind you where to put those questions. But we will freeze those, and we'll have a great Q&A time there at the end. For anybody that is asking, this is recorded. It will be available tomorrow afternoon at some point. We'll have it on YouTube. We'll have it in our help desk, and then we'll have it externally facing should you want to send anybody to this webinar on our website and then let them get more information about JobTread in that same sort of space. Her presentation today is called Building a Strong Financial Foundation. So without further ado, everyone in the chat, please give a warm JobTread welcome to today's Pro Spotlight guest, our presenter, Erin Andrews.
Oh, well, thank you. That was quite nice. I just love seeing the names on here. I recognize a lot of names. Some are clients, some are just people I've seen on social media. So thanks for attending. So really quick, I just want to you're going to put in a fire sign if you do this, or a poop sign if you don't. Who here could tell me their average gross profit for last year without looking? If you know it without looking, you give a fire sign. If you don't, give a poop sign in the chat. Oh, I probably got to get down there. Kind of funny. Poop. All right. Okay. And what if you can tell me your client acquisition cost for last year right away without looking it up? Poop or fire? All right. And who here can say they did tax planning last year and have this tax season and are not scared what's going to happen. It is tax season right now. So, all right, lots of poops, some fires. Great. So, how do we get that going? Poop or fire? New package? Poop or fire. Yeah, it's a good idea. So what I'm here to talk about are basically the really important metrics that I believe not only should contractors be tracking, but really any business owner should be tracking. And so if you are not able to pull up or know these numbers right offhand for last year or currently as they stand year to date, you probably should consider tracking some basic ones just to start. But I'm also controlling the presentation. So let's go over here. So that's me. Yes, cheese juiced. So why does it matter to track all these KPIs and kind of get an insight into your business? Well, I'm sure some of these stats will not surprise really many of you, but 82% of businesses fail due to cash flow problems. So how can cash flow be measured? If you know your numbers, then you will understand your cash flow. 46% of contractors say job costing is their weakest area. Obviously, that is something that's very important for contractors. If you don't know how much money you're making on your jobs, how do you know if you're making any money at all? And then 50% of businesses don't survive in the first 5 years. These are some scary statistics, but it's kind of amazing what can happen when you really get some insight into your business and are able to really track what's going on so that you're making real decisions versus just guessing, because that can be one of the biggest, I guess, fatal mistakes business owners can make is just guessing. So I like to start with an analogy of what contractors can understand. So this is a crappy house built on a really bad foundation. As you can see here, the foundation's cracked. It's not doing so good. The roof is the shingles are all coming off. The windows are out of alignment. The bricks are falling off. And to me, this is what the business looks like when it's built on a weak foundation. Everything above the foundation just crumbles. You're just really not going to have any good structure. There's problems showing up everywhere. And in construction, are you going to ignore a weak foundation, a poor foundation? Probably not. But in business, a lot of business owners tend to ignore that foundation and they go right into the roof. They forget about the walls even, or they focus somewhere in between. So what we want to do is we want to make sure that we are fixing the underlying issues before we start building all the way to the top. And anybody can ask questions throughout this. I'm happy to answer them. And Michael figure out what's what. Okay. So what I did was I built this into a 3-system ecosystem in a way. So I see the foundation as the accounting system. So obviously I own an accounting firm and I see lots of businesses every day have no or very poor accounting system set up. Foundations that includes like tax entity, things like that. They're not doing tax planning. They're not getting monthly reports. They really have no idea what's going on. So that's the foundation. If you have a really good accounting system, you're really setting your business up for success. Then you have the job costing, which is to me, the walls. That's the structure, I guess you'd call it. So that's where JobTread comes in. And then also for this purpose, for the accounting, we are going to use QuickBooks because that's the system we use and most commonly use. But for the job costing, that's the walls, that's the structure. If you have really solid job costing system set up, you're really going to have a good structure to set up. Then what goes on top is your your marketing and sales, which is your CRM. So that CRM could be through JobTread, it could be through Go High Level, depending on how big your marketing and sales system is. But if you combine these 3 together, that builds a pretty nice house. So yes, co-system. Sorry, I'm reading the chats at the same time. So this is how I built this for this purpose here. So again, accounting is the foundation. So it combines the information coming in from JobTread, your CRM, and it combines all this information and payroll, and it gives you the real financial truth of what's going on with your business. It's not just compliance or QuickBooks. It's really the only place where everything meets. Everything kind of comes together. So yes, you might track your leads in your CRM, but ultimately all the sales from that closed business filters down into your accounting, and it helps you project out things in the future and whatnot. So the accounting is the foundation for all this. So what weakens that foundation? One of the things I think is one of the more overlooked aspects of people's business. I do see like in the JobTread groups and all over contractor groups, people are always wanting to save money where they're doing their bookkeeping. I'm going to have my wife's sister's mom do it. I'm going to have my admin do it. She took a QuickBooks class. That's going to weaken the foundation. Accounting is accounting. It's not admin work that your admin is doing. So the other thing is people aren't talking about tax planning. One of the biggest disruptors you can have is not having tax planning done. So if you have already, if you have done no tax planning for 2025, now you're getting your tax return prepared right now. Let's say you owe $90,000. That's really going to screw you up, I'm assuming. So you probably already spent that money. That money is not yours. You owe it to the government. So one of the biggest things you can do for your business is tax planning. And how do you do that is with good books. So late or inaccurate books, I just talked about your mom's sister's best friend, whoever that was. We call her Great Aunt Bertha. Late or inaccurate books. Time goes by really, really fast, especially when you own a business. And so I understand that books can get, delayed and, not made a priority. But if those books aren't being done at least monthly, just so you're getting some monthly reports, you're not going to be able to make real-time decisions. It's very difficult, which also goes into no monthly reconciliations. Just because you downloaded the data into QuickBooks does not make it accurate. Also, just downloading data into QuickBooks alone and reconciling doesn't make it accurate, since you do have loans and other things to account for. But basically, your books are just not up to date. The other thing is your labor burden rate is not fully accounted for. I will talk about your labor burden quite a bit during this as well, because it does affect several aspects of your business. Then you're also blurring your job costs versus your overhead costs. So a lot of times I see QuickBooks that come in that have materials and supplies underneath what's your overhead expenses. Or I see, let's say I see marketing under your cost of goods. So that's really going to make inconsistencies and not be able to rely on your reports and actually, what your gross profit is. And then inconsistent categorizations. This might not seem as important, but actually for me, especially, I obviously own a business. So I also try to see this from the owner's perspective. And one of the things I love to do is look at my year over year or month over month comparisons on my financials. And if I have inconsistent categorization, I'm not looking at accurate data, right? Like if I have materials and supplies going to tools one month, Home Depot going to tools one month, and I have it going to materials supply and supplies the next month, I can't really see what my true cost is for that, because I'm not comparing actual data or accurate data. So you really want to make sure wherever you're categorizing something, it's very consistent and you're doing it the same time, month over month, year over year, because like I said, years go by fast, and you're going to want to compare, 2026 numbers to 2025 to see where you stand. A great example of that is I love to go through to see where I can cut costs. I'm sure that's shocking because I own an accounting firm, but one of the easiest ways for me to go do it is just to go pull up my P&L, and I see, why is this cost higher than that cost? Obviously, if I'm growing, there's going to be some costs that go up naturally because of the growth, but there's other things that I can account for. Actually, not to shoot my own horn, but by doing this, I cut over $100,000 last year in expenses, my own business. So it does work. All right. So these are just some things that can weaken your accounting foundation. Now, what should your accounting foundation tell you? What must it tell you? It should tell you your net profit. What is your net profit? I hear this a lot. It's your net income. For most of us, people always refer to the EBITDA. That's not really that. It's just really your net income, your profit that you see at the bottom line on your profit and loss statement. Sorry, I'm reading the chat at the same time. And so you really, really need to know what your net profit is. Your overhead percentage. What is that? The overhead percentage is the amount of expenses it takes to run your business. So that's your rent, your admin costs, marketing, utilities, maybe recruiting expenses, something like that. So you need to know what that overhead percentage is, because what that does, it tells you how high you need to price your jobs. If you don't know your overhead percentage, how do you know how much to price your jobs, right? You need to know how much profit to make on those jobs. If you're not covering your overhead, you're going to price your jobs wrong. Excuse me. Break even revenue. I think this is fairly self-explanatory, but it's all of your Expenses, how much do you need to cover your expenses every month? How much revenue do you need? So that's pretty important to know. That's basically your nut to cover that month. How much do you need in revenue to cover that? Then you have revenue per employee. This is one I think could be important. This could be this could change depending on the company too. So if you are a smaller company, probably under like $1 million, maybe 1.5 million, and you are the owner and you're on the tools and maybe you have one assistant, your revenue per employee is going to be a lot higher than a larger company that has a big crew, PMs and all that, because naturally there you have more employees that are splitting up, towards the revenue. So this is just something to keep in mind when you're looking at things. Just like, what is the average revenue for your company? You either want that to go up depending on your goals, or let's say you're trying to replace yourself as the owner on your PM, and you want to replace yourself in the company with a PM or something like that. Your revenue per employee is going to go way down that first probably 2 years because it costs a lot of money to replace yourself in that business. But it's just something to watch and be aware of. The next thing I like is AR days. This is something, it always blows my mind, to be honest, when we see someone's accounts receivable. So AR is accounts receivable, like what customers owe you. I'm always amazed when I see AR, people have $860,000, let's say, in bills just sitting there, collections available to them. I believe actually Eric made this during the JobTread keynote. He talked about how he went in and he had his the person that he went in and he started JobTread with, the construction company. They had, I forget what the gross revenue was, but their AR was about $800,000 or $900,000. And I think it was around 30% of their gross revenue. So imagine if they actually had collected that and they wouldn't be taking out lines of credit, things like that. It just really helps your cash flow. And so having a really good system for collections and accounts receivable is really, really important. You really want to have that below, I would say 30 to 45 days. If you're doing 60 days or more, you probably want to really check your collections process, how what your contracts are like and things like that. Excuse me. And then your cash position. If anybody follows Dave Ramsey, he thinks you should have 16 years of cash available in your account. This is just what I think of when I think of Dave Ramsey. Really, and realistically, it's really hard for a business to have even 6 months worth of cash available to cover expenses. But if you could reasonably have 2 to 3 months of your operating expenses available as cash, I'm sure some of you are even gawking at that, but that would just be, you could sleep at night. What if the owner gets injured or gets sick or something, or wants to take time off or something like that? That having that extra buffer of cash will actually, it'll set you in a good position and actually allow you to sleep probably better at night. And then something here else is projected tax liability. Again, I had somebody come to me. He owed $90,000 last year, and he had no idea that he owed that. He did not do any tax planning. He was super focused on, his job profitability, which obviously his jobs are super profitable, but he never thought to ask an accountant, hey, what's my tax liability going to look like? So he's all fired up. He's got all this money. And then all of a sudden the accountant's like, oh, pay up that 90 grand in taxes. It really, really pays to do some tax planning. Even if you can mitigate that tax, or even if you still owe that $90,000, there's ways you can spread it out throughout the year, plan for it. You really don't want to screw yourself on the cash flow position and also overpay in taxes, because nobody wants that. Nobody, especially right now. Okay, I'm just going to answer this question. What is a good revenue amount per employee for a healthy business? Again, this sort of, I don't even have, do I have a number in here? Here. My notes are gone, but the revenue per employee that I had, it was between 150 to 200,000 for, but healthy, you have Austin has this question for a healthy business. That depends. That's sort of, it's relative to the business, but 150 to 200,000, some could be 300,000, some could be 100,000. It really, really depends, Austin. That's a good question though. And I realized I didn't tell you guys what the net profit should be. You kind of want that to be good looks between 8 and 15%. If you're doing 15% for your net profit, you're doing pretty good. And that includes if the owner's getting paid, they have a paycheck in there. So if you're doing around 15% net profit, that's really good. If you're doing over that, you're crushing it. Maybe you're doing a lot of the work. Again, you're the owner on the tools. But if it's below 5% or less, you have really no margin for mistakes. You probably don't have cash to reinvest or hire a new employee, or sort of you're just covering, you're living quote unquote paycheck to paycheck. So, but again, if you're growing and you're expanding the company, sometimes you need to overhire for capacity because you're going to sell jobs. So this really depends. Again, it really depends on the position the state that your business is in, what's going on with it, what season of life it's in. But ideally, you're not negative, at a loss for net profit or net income. And then for your overhead percentage, a great overhead percentage is 25 to 35%. So that means whatever it costs to run your business is around 25 to 35% of your revenue. And smaller companies, again, trend a little bit higher just because they just have less employees and things like that. So high overhead is going to make you price your job higher just to break even. All right, so those are just some numbers I wanted to give you to go along with these numbers here. Does anybody have any questions, comments about this before I move on? Oh, Troy's asking, considering residential or commercial. In my experience, residential has higher margins than commercial, but that's something we deal mostly with residential builders. But we do have some commercial, but I would have to agree with you that I believe that the net profit is typically higher on residential unless you really have it nailed down in the commercial. Okay, I'll move on. Sorry. There we go. Okay. So doesn't this house look so much better now than it did before? So now we have job costing, which is the walls or the structure. So it's really the system of the business. This is where, your day-to-day profitability shows up. You wouldn't have a business without having jobs, obviously. So this is really important to dial in. I will say, I see with JobTread customers, because we have a lot of JobTread clients, I see half and half. I see people that have really, really dialed in their job costing and their books have sort of just gone, like their operating books have just sort of gone to the side, or they haven't really focused on either one. So what's good about the JobTread crew is that a lot of them have really worked really hard on their job costing, and they just need help with the accounting. And then some people are just getting started with the job costing. But this is really, really important. I think this is becoming more talked about too in the industry, just to really understand what your margins are, mark up all that stuff. So it tells you whether your pricing and estimating is actually holding up once the work is completed. And if this system isn't accurate, like if you're not constantly checking the profit on your jobs and all the expenses and things like that, you can't fix it. You can't reprice the next job properly. So you're just continuing to use low pricing and low estimates because you're not actually job costing to see where you're losing or making money. That's not very fun. So where do contractors go wrong with this? So before I dig in, can anybody tell me if anybody here regularly reviews your estimate versus actual after a job closes? You can just use the poop or fire, I guess. That's what we're doing today. Poop and fire. Good. See, I think there's more fire than poop on this time. Oh, good. Allison. All right, Diana. Okay, good. Great. And how many of you have raised prices without being 100% sure what jobs actually need the price increase? You're just guessing. And that would be, I guess, a poop, since it's not very cool. Okay, that's okay. All right. So basically, there you go, Dimitri. It poops. There you go. Incomplete cost entry. So you are forgetting to add expenses that are associated with the job. This could be, maybe you have guys in the field and they just aren't very good at using the app and they just sort of forget to add to add on these, to add on, they had to go to Home Depot, pick up whatever for the job, and they just forgot to add it on. You're also not talking about labor burden. So you're not putting that in there. So if you are not including all of the expenses, obviously your job costing is not going to be right. So you probably think your pricing is wrong, but in reality, it's obviously it's off. Okay, you're not reviewing your estimate to actual. So this is super important. This is, you're going to talk about labor overruns, your missed materials and mistakes that you aren't going to correct future bids. And then, so you're just going to continue pricing the job the same way over and over and over. That's not efficient. You're not making any money. You're not learning from your mistakes. Until you have that nailed down, I believe that you should be reviewing every job to make sure that your estimate was as close to actual as possible. And if it's not, why? Then we have outdated labor rates. So some of these things, this can happen, time goes by fast, as I said, and maybe your labor rates don't include, people got raises throughout the year. Your workers' comp rate went up. Tax went up, like state taxes are always added for employer state taxes, things like that. If you don't have your labor rates completely accurate and up to date on a regular basis, you are not, and do your job costing right. Typically, labor is one of the highest costs of the job itself. So you really want to have that labor rate as dialed in as possible. And then also, it's basically the job will be underpriced before it even begins if you don't know your labor rates and you're missing labor rates, things that go into it. And so the other thing is only using JobTread for proposals. You're using it, you can send estimates, but you're not actually tracking your job performance, your costs, your time, and changes aren't tracked once the job actually starts. So if you have JobTread and you're not using it, that's silly. You should continue. You have the proposal set up. The next thing you need to do is set up the job costing. Inconsistent team usage. This is another thing. I just talked about a little bit ago, maybe someone's out in the field, they bought something at Home Depot, but if you don't have buy-in from your entire team, let's say your PM just really isn't super tech savvy and they're just really pushing back on using, like even just taking a little picture in the field and trying to get the costs in there, that's going to really cost you. You need to have the program be super successful and have the job costing be successful. You need to have buy-in from your team. So whatever that looks like for you, really good training. JobTread obviously offers really, really great training, maybe the in-person sessions that they have, but making sure that your team is following the same process. You should probably have some SOPs written up about this, expectations, but making sure your team is also bought in and using the system as well, making sure they're job costing and putting things in a JobTread the way they need to. Then the next thing is you're missing the field feedback. So let's say something happens on the site and it never makes it back to the office. So the crew on site, they have this issue that's coming up, and maybe it's a recurring issue, but no one's actually bringing it back to the office to talk about hey, this keeps happening at our job sites, and we're addressing it at the job sites, but we're not actually bringing it to the office to talk about, the back end, the root cause, whatever it is. Everybody needs to communicate and collaborate so that everything is on the same page. So you'll have delays or reworks, client changes, and inefficiencies won't be documented. If someone's saying, hey, I want to do a change order in the field, that's never communicated to the team in the office to actually process that change order. And then, excuse me, JobTread is not treated as a core operational tool. So I just said this a little bit ago, JobTread should be, for my sales guy, I call our CRM the Bible. That's where he should go. That's where he should eat, pray, love, in our CRM. Same thing for your team. JobTread should be treated as a core operational tool to help them track their jobs, be profitable, everything that you guys the features you're using it for. So just making sure that that's being used, because combining all these things will make you go wrong and not have proper job profitability. Yes, and incentives. I would love to talk about incentives. That's actually one of my favorite things is talk about incentives for teams, but we can talk about that at the end if you guys want. Casey wrote it in the chat. Okay, so what should job costing tell you? I hope this is no surprise to anybody, but gross profit per job, how much you're making per job. What good looks like is 40 to 50% gross profit per job. And so if you're not making about that, you probably want to consider raising your rates. That is, as far as I'm concerned, the standard between 40 and 50% gross profit is what you should be making per job. And then when that flows through to the income statement, you should also see your gross profit overall for the company between 40 and 50%. Contribution margin. So that tells you how much of that gross profit is available to cover your overhead expense. So you want to make sure that, again, this all comes back. If you don't know your overhead, you don't know how to price your jobs. You don't know how to mark them up. You don't know what the margin should be. So you need to make sure that whatever is left over after that money, goes to materials, subcontractors, permits, whatever, that you have money to keep the lights on. Very, very important. Job costing variance. So this compares estimated costs to what actually happened on the job. It shows whether your pricing and estimating are accurate. And I would say good looks like staying within, plus or minus 5%. You don't really want to be over or under anything lower, more or less than that, 5%. And then, so obviously if you have consistent overruns, you're just not pricing things right. And you're doing bad assumptions, and you probably should go back and figure out where the estimating is going wrong. Okay. And then labor efficiency. This points to planned labor hours to actual labor hours. So if you're pricing out a job, you're doing an estimate, and you estimated that they were going to do 50 hours, towards that job, and instead it took you 100. Obviously, that's a pretty big deal, and you priced that wrong. So you really, really need to know, like, your scheduling, how long things take, estimating, productivity, like all that kind of stuff. So good looks like between 90 and 100% of what you estimated versus the actual. And then obviously the more you're over that, you're just eating profit off that job if there's any profit left. So you want to just make sure you understand how long it's going to take you to do that job in actuality. So I'm assuming over time you get better and better at that, and there's lots of different tools available for that as well. Okay, now we have our labor burden rate. This is something that's really important to me. So I have a lot of people that say, Erin, I do job costing. Oh, do you? That's cool. Yeah, I put in all my materials, my supplies were great. We put that Home Depot expense in. I'm like, great. What's your labor burden rate? What is that? So that is something very important. I just said labor is one of the highest costs of jobs. It's really the highest cost of running a business is your labor. And so, yeah, you can get your subcontractors in there. If you're subbing out the job, it's much easier to get because that's it. That's your labor burden, whatever the sub is charging you. But if you have a team inside that's doing it, you really need to know what goes into that labor burden. So that is not just their pay. So if they make $20 an hour, that's one piece of the labor burden. Okay. You want to make sure you are capturing the employer payroll taxes, workers' comp, any employee, any benefits that you pay for that customer, for that employee, a paid time off. Some people include even things like uniforms for that employee, basically any direct expenses for that employee. If you didn't have that employee there, that expense would be removed. What would that look like? How much money would that save? So just same thing. You want to margin. Mark. So you want to make sure you have that really, really dialed in, your labor burden rate. So hourly pay, I just want to get this across, is never the true cost, never the full cost of an employee. There's a lot of other things, cost a lot of money to have employees that maybe you don't even think about, but even just the employer taxes alone is 7.65% off of every dollar, plus whatever your unemployment, state unemployment, federal unemployment rates are. So you can even just say right off the bat, you're at 10%. So that $20 an hour employee is costing you, oh my God, $22. Sorry about that. Brain fart. Okay. And then profitability by job type. You want to make sure that you're looking at all of your jobs, because I have a lot of clients, and I'm sure there's nobody here that is a jack of all trades and says, oh yeah, I do siding. I will install your kitchen. I will do your bathroom. I will do your roof. I will do your gutters. That's a great way to start out because you got to put food on the table. But at some point, you need to take a real look at what each job that you have, each job type, and see which one's the most profitable. It might surprise you. And then I would encourage you, if you're reviewing this, to really lean in and say, why is this job my most profitable one? And hopefully start focusing primarily on that job type. And then you can start talking about niching down a little bit. That's going into a whole different thing. But if you don't know your most profitable job type, then you might just be might be putting up gutters all the time because you're getting them, but it's actually, you're losing money on those jobs where you could be doing kitchen remodels and that's where you make all the money. So if you're not reviewing and evaluating the profitability by job type, not just per job, you're probably leaving a lot of money on the table, and you're probably missing opportunities to sort of niche down and really focus on a very specific area that you're very profitable in. So like, what is it? I hear the saying, some money is too expensive. That's how I feel about a lot of things. So not all revenue deserves to grow. So sort of focus on what you're best at. All right. I'm going to move on. Oh, we're at 2:38. I gotta hurry up. Okay. So this is the fun stuff for me. Even though I own an accounting firm, I love talking about marketing and sales. So obviously this can be done in JobTread, but if you have sort of outgrown that for the marketing and sales aspect, something like Go High Level, HubSpot, that's where you can do it. Either way, have a system. So you can even have Excel if you really want to. That's totally cool. But hopefully you're tracking it somewhere. It's the roof, right? So if the sales and marketing are disorganized, then everything else stays unpredictable. So how many people here have spent money on marketing but couldn't really clearly explain if they had any ROI and what worked? Do you guys want to put a... Yes, I have done this myself. I have put hundreds of thousands of dollars into marketing and had no idea what happened. I do believe, yes, marketing companies, be careful with those too, I will say. But I had no system or tracking for this. So we're just throwing money. It's like, that meme where the girl's sitting out the window and she's just literally throwing money like out like this. That's how I felt about marketing for about 4 years. It was great. So basically what I would do is start tracking your marketing efforts. And so what does this control? It can, it sits at the top of the house because it does control the growth and predictability, and you can plan for the future if you are tracking your sales and marketing very closely. You can use the past couple of years trends to predict what your sales will be the upcoming year. In fact, this is actually a great way to do it. Actually, you can look at your closing percentages, your leads in, things like that. Also see, what really works, for you in marketing, and really lean into that. Maybe Google ads is terrible, but you're doing really, really great at Facebook ads instead. But you don't know that if you're not tracking it. So the bottom line is weak sales and marketing system. It creates just constant uncertainty, even when the foundation and walls are solid. So some guy told me once, if you're just sitting and waiting at the mailbox with a catcher's mitt, to get paid, that's kind of how I feel about just relying on referrals. I always hear, I'm referred a ton of business, which I think is fantastic. I think if you're getting referred a lot of business, you're probably doing a really good job. You also might be pricing too low, but if you're doing a really good job, you should be getting referrals in. But that isn't a marketing plan. That is not a marketing strategy. It is part of a marketing strategy, but it is not the entire thing. So having some kind of plan and tracking something is better than nothing. So let's see here, where sales and marketing systems fail. So you're getting leads in, and I'm sorry, contractors, but you guys are notorious for this, but no follow-up process. I can't count the number of times I go into some Facebook group and someone's posting, I reached out to 4 different places and they never got back to me. That's literally just throwing away money. It also just makes you look bad. So not having any type of follow-up process can really cost you a lot of money. I think long-term too, not just the short-term, but long-term, because people will remember that. So having a really solid follow-up process for when you do have leads come in, so that they're at least getting followed up with and you're addressing it. You have no defined sales stages. This can be very simple. It could just be, just a couple things for deal stages. If any of you are really into sales, you'll know that, you have you can have as many stages as you want, but you could just really make it super basic, so that you can at least have an idea of where people stand in your pipeline for leads. So maybe you had a call come in and you're waiting to hear back. You have a proposal out to a customer. There's another one. You have a verbal yes. There's another one. So it's just different ways you can track your sales stages. You have no sales goals or activity targets. So this is something I think is super important, and also one of the main things that your accounting system comes into play and really, really helps you, because if you don't know what you made last year, what you grossed, what you want to make this year, it's very, very hard to set sales goals. So there's difference. You could have a revenue goal, which is what you want your company to gross for the year. That could be a goal. And there could also be sales goals. So what you want to sell for the year. So basically just saying, I want to make more money is not a goal. I don't think it's a goal anyways. So you want to say, I am at $1 million in 2025. I want to gross $1.5 million in 2026. So what's associated with that? Activity targets. How many leads do you need to get in? How many opportunities? How many deals do you need to close? Like, what does your pricing look like? All that kind of stuff. Sales goals. It could be, I want to sell $500,000 worth of jobs in 2026. So again, that's adding on the $500,000 in revenue. But again, what does that mean? How many jobs, how many leads need to come in, all that stuff. Then you have no conversion tracking. So this means you have an ad on a billboard at a baseball game. Okay, those are great to do. I think that's great if you're really supporting, your son's baseball team or something like that. But there's no real way to track that where that's coming in, which is also lead source tracking. But also that comes into the conversion. So let's say they call and then they book a call. So that's a conversion from there. So if you're not tracking where they're getting converted, where they're coming, that kind of stuff, it's really, really difficult to know how many leads turn into estimates or signed work. So you really want to look at that too. Then you have a disorganized or stale pipeline. So old deals are just sitting there. You sort of just like focus on what's coming in right now because you just sort of forgot about those deals you were talking to a month ago. You just want to make sure your pipeline is pretty clean. You're maintaining it. I will say the more leads you have coming in, the harder it is to keep that up to date. But if you have a system like JobTread or something like that, it can make it very easy. And you'll probably put that in with your sales stages. And I just talked about this a little bit, but no lead source tracking. So one of my biggest things has always been, before I even really got into marketing or sales, is where did a lead come from? So my first question, how'd you hear about us? How'd you hear about us? If you are not tracking how you hear about, how these customers are hearing about you on a regular basis, and you're asking every single customer that comes in, how'd you hear about us? Or your CRM isn't tracking it, you have to be, because you're just throwing stuff against the wall, hoping what sticks. You don't actually know what's coming in. Again, like I said earlier, you could be doing Google ads, thinking it's doing great, but in reality, they're all coming in from Facebook, or they're coming in from some golfer's ad you did where you had an ad and you just did a thing there, and you just for some reason people read this golf magazine that your customers read or something like that. That's where it could be coming from. So you just have to ask where it's coming from, so you can focus your marketing dollars on that source, that lead source that you're using. And then you're not tracking your costs by channel. This goes into lead source tracking too. So how much does it cost you for each lead source channel that you have, each marketing channel that you have? I found out I was spending $8,000 on Google and Facebook ads last year. And not found out, I guess I knew. That wasn't bringing me anything. So I stopped that because I knew that wasn't working. By the way, that was only 4 months, which is wild. That's okay. So you really want to know what you're spending money on and where it's going. And then chasing volume instead of quality. This is another thing that I think new business owners especially go after, because you're just really trying to get something to put food on the table. You're just trying to build your name out there. So you want to make sure you have an ideal client, which is right below it, but like you have your ideal client customer profile nailed down. You have an idea of what you want. You're not just taking anything that comes in the door, tire kickers. You're not discounting just because they ask it. You just want to make sure you're getting quality deals in, quality leads, and quality customers, so that you are very consistent and you can build a solid business off of that, which comes from also, if you go back to the job costing, reviewing your jobs by type too. That will also help you. And then your marketing spend is not reviewed against results. If you are not tracking your client acquisition cost every year, I highly recommend it. Basically, you take all of your marketing and sales expenses for the year. So I think I'm going to go over this actually in the next slide, but actually go over the next slide. How about that? So you want to know how much you're spending versus how much you're getting in. I obviously didn't do that for the first 4 years, and I spent a lot of money, and it was terrible. Don't be like me. Okay, I'm gonna speed up here. Talking a lot right now. So what is your what your sales and marketing system must tell you? So you should know your sales cycle length. So if your sales cycle length, it really depends on the customer, on the company again. I actually polled, I think, some contractors. Some people said 14 days, some people said 30. Commercial takes longer, obviously, I think, between bids and things like that. But really, you should have a very consistent sales cycle length that works for your company. Ideally, I think it should be about 14 days. If you're like certain businesses, I just think people go stale after that length. But some people have a longer process because maybe they're charging for an estimate to put together the whole scope of work that needs to be taken. You're charged for that. So that could take a month in itself before they actually sign on. So there's all different situations, but know your sales cycle length. The longer you go, the less likely you are to close them. Your closing ratio, this is actually something that's pretty easy to track. It's basically how many deals did you close versus how many leads that came in. So that's pretty important because that can actually tell you, then you can predict out for next year. So if my closing ratio is 27% in 2025, obviously want to improve it a little bit for 2026. I know that let's say it's 25% just for ease. I know that in 2026, I'm going to close one of every 4 leads that comes in based on my historical data. It's very easy to track that, and it can tell you a lot of information, especially when planning ahead for your goals. Excuse me. Your lead to estimate ratio. So you just want to have a good quality lead. So a good quality there is about 50 to 70%. Just to make sure that you're getting from that lead to presenting them with an estimate. Again, this could depend. I did a workshop similar to this a couple weeks ago, and someone said it was 11%, which is totally fine because he was very niche down, and I think he needs to dial in his marketing a bit more. But 11% is totally fine because he weeded all the tire kickers. If that works for him, he's very profitable. So I'm not going to say anything about it. Your average contract value. This is also super important because you need to know, again, to predict this future sales, what is the average job that you sell? So if you're the jack of all trades and you're all over the place, that's going to be very difficult for you to do. But let's say you really focus on kitchen remodels. You want to know your average contract value so that you know exactly how many of those kitchens you need to sell this year to hit your goals. But it also, you can predict how many jobs you'll have and things like that. And then that goes back to the closing ratio, all that jazz. Pipeline value, your pipeline value, it's basically whatever let's say you have your sales goals. Like for my pipeline value, it should be, I'm going to close 25% of everything that's in there. So my pipeline value should be 4 times what my goal is for that quarter, that month, whatever it is, because I know I'm going to close 25% of that. So whatever your closing rate is, you want your pipeline value to be multiple of that. So if your closing rate is 20%, you want to have 5 times in your pipeline of what you're going to close, if that makes sense to everybody. I'm going to go quicker. So lead to estimate ratio. That's just good quality leads. Did I have that in there twice? Oh, it's in there. How did I get in there twice? We just talked about that, so you know about it. Cost per lead, how much it costs you per lead, which is a little bit different than a client acquisition cost. So cost per lead could just be the click. It could just be the Google ad spend that you had on there. You want to know what that is. That, again, just sort of depends on your marketing efforts and what you have going on there. And then your lead response time. This is super important. Shows how quickly leads are contacted. I would say 15 minutes is what you should be doing in any sales situation, to be totally honest, unless it's the middle of the night. Same day at worst, people are going to call the next person that's going to answer the phone. Customer acquisition cost, that is, again, that sort of just depends on your business, but 5 to 10% of revenue is probably standard. You just want to know all marketing and sales expenses, sorry, I'm reading two at the same time, are all captured in there, and you just divide by the number of customers that you sold. That will tell you what your client acquisition cost is. That's actually really important, because then it also goes back to, if you're spending money on these weird channels that you don't need to be, you're going to get rid of that. Maybe you want to add a sales guy. So now that cost is going to go in there. It's going to increase your client acquisition costs, but you actually might sell more. So there's a whole thing that goes into it. Your top performing lead sources, I talked about this a lot. Just make sure you know where your best lead sources are. Again, if you track everything, you'll figure that out. And then your lead volume. So how many leads are you actually getting by source? Whew. Okay. And I have revenue booked versus sales goal. I think that's pretty self-explanatory. You want to be that pretty close to 100%, if not more, because that means you're either hitting your goal or exceeding your goal. Obviously, if you're under your goal, then you're not hitting it, but hopefully you're close to it at least. Okay. I will just quickly just talk about this guy. I just have a little quick story, and then, because we don't really need to continue the rest of it, but basically, Jack of all trades, this is Jack. This is an example of one of my clients, actually. I'm just calling him Jack. He's miserable, right? He says yes to every type of job. He has no clear job profitability. He has messy and late books. He's just constant cash flow stress. He's just looking at what's in his bank account. And he's like, oh my God, I have to cover payroll on Friday, and it's Tuesday, and I don't have enough money. He's marketing with no tracking. So he's just that person throwing the money out the window. Surprise tax bill, which nobody likes. And he's busy. He's getting jobs, but he's not confident. I don't know if anybody else can relate here. When I was in person, I had a few. Okay. So what happened was, we met with this guy and we said, all right, guy, first of all, you need to start job costing. Like, what are you doing? And then once he started doing that, he started really paying attention to what jobs were the most profitable. And he was like, all right, kitchens and bath remodels are what I do. I am done doing the gutters and the whatever else there is. I am focusing on these two profitable services. Now he can also target his marketing efforts, right? He can also standardize his SOPs internally, so his team can really focus on getting really, really, really good at the business kitchens and bath, and not have to know how to install a gutter too. So yeah, stick with what you know and let it flow. Exactly. I always say riches are in the niches. I think that's Alex Hormozy, but and then clean books and accurate job costing. We got his books up to date. He started job costing. He actually knew where his money was going, which that goes into cash flow, because people don't take into consideration loans too, right? If you have loans, that's part of your cash flow. You need to know what's going on, and that helps with the clean books. His sales and marketing got tracked, like I just said. He was able to then make clear pricing decisions because he had all this. He's like, oh my God, my overhead is a lot more than I realized. He had no idea, and he had to raise his prices. And I think there's a lot of head trash around raising prices. That's our head trash, or yours as a business owner. Your new customers don't know what your prices were before, even if they were referred by somebody else. No job is typically the same. So raising your prices typically solves a lot of problems. It gets rid of the tire kickers. It gets rid of like your bottom 5% of clients. It helps you have a better organization overall, more profit. So raising your prices is very, very good idea. And then proactive tax planning. He knows what he's going to owe in tax. He's making more money, so he will owe tax, but he knows what it's going to be, and we are going to mitigate that and try to plan for that. So he has confident, intentional growth. He's happy. He's not miserable anymore. Hope anybody can relate to that. Okay. I was going to get into all this stuff. It's basically how the systems talk to one another. But basically, if you're using JobTread, I highly recommend you use, at least make sure your job costing set up, things like that. These are just some examples which will be in the presentation. And I think I have a little handout to go with it. Okay. So here's our house again, business with weak systems. Well, I'm just going to open something really quick. The weak systems look like that. Your house is falling apart. And then with the strong systems, you're good to go. You have a beautiful brick colonial. I think I got that right. Colonial. I believe I'm from Massachusetts originally. I hope I got that right. Sorry. And that is what a strong house looks like. And I suggest reviewing your stuff weekly and monthly. I follow Traction EOS with my company, and so do several of our clients. So you should be tracking this and reviewing this weekly and then monthly. You can have your employees do it, your project managers, things like that. They can start putting in these figures, but definitely want to start tracking this weekly and monthly. These are obviously just a handful of the metrics that I recommend. I do have a handout that I can give with KPI tracking. Traction is amazing. I could talk about that for another session if anyone wants to. No. But EOS, yes, they were just saying it in the chat. So don't just leave here and say you're not going to track. I even have like a starter tracker KPIs that I recommend people do. So if you're just getting started, to have at least just basics of what you should be tracking. These are sort of some of them that I think you should be doing. Let me see if there's anything else in here we should go over. Who tracks what? That's some stuff you can look at. All right. Someone has a question. Is there any other questions while I'm just about to finish up, in addition to the ones that are in there?
All right. Erin, do you want to jump into the Q&A?
Yeah. Just do
awesome. Everybody, really quickly, just so you know, typically what we'll do today is if Erin gives me permission, we can put her slideshow or a version of her slideshow in the resources link that I have included here. So if you'll see right at the middle of your Zoom icon row, there is a resources. It kind of looks like a cascading piece of paper. We'll put any links or any files that she gives us that you guys will be able to have access. I'll also put that whenever I post it up on YouTube, and then the help desk will make sure that you guys see that link as well. But everybody, first and foremost, just give Erin a round of applause and give her a little bit of a thank you for her presentation today. Before we jump into the Q&A, we always tend to have a little bit more rolling in. So I'll go ahead and jump into it. Did you have any final thoughts you wanted to say to close out before we jump into the Q&A?
No.
Okay.
I don't think so. Track your numbers, man. Don't make the mistake I did.
Track your numbers. So many good things. I've got so many thoughts too. But we'll go ahead and jump into the Q&A. You guys stick around, and again, you can continue to ask questions and until Erin says that she needs to go, or you have no more questions. So I'll try to be respectful. Maybe we'll give about 15 minutes max. We'll try to cap it up. Mark, an anonymous attendee, which creative naming convention for your parents, kind of asked the same question. In terms of gross profit in construction, Mark was asking, is 40-50% in gross profit? Yeah. Okay.
Yeah, gross profit.
Okay, cool. So he's wanting to know, is that margin or markup? How would you answer that question?
Oh, that's a great question. So
I actually have a.
Yeah.
Go ahead.
Great. I would love to hear it. Go ahead. No, I want to hear you.
No, we have a great resource for this.
Okay, good.
And I'm going to put the link into the chat for everybody to be able to look at. If you are curious what margin and markup is, we actually have a full article where we walk you through the differences between the two. So if you are curious, go look at that video.
Yeah. So I'll give examples. Okay. So gross profit is different, than margin or markup. So gross margin. So let's say you have a 40% gross margin. That means you're keeping 40 cents of every dollar of revenue after direct costs. So, and then if it's markup, you're adding on 40 cents of every dollar of cost. I know it doesn't really help, but so if you have a 40% margin, that's actually I just put like a little, I want to get real numbers, a 66.7 markup. And if you have a 40% markup, that's only a 28.6% margin.
Mhm.
I think they should read your thing. I always find this. I'm always have to go back and do the math again.
Yeah.
So gross margin for like specialty trades like HVAC, electrical, plumbing. So this is margin is 35 to 50% is super strong. GCs 20 to 35%, which makes sense. And so just to kind of give some ideas, if that makes sense.
Yeah.
Yeah.
Yeah. Exactly. If it costs you $1, charge two. I
Yeah, exactly. Oh, when in doubt.
like it. Hey, you did say to increase your your
All the
profit
time. Yeah.
all the
Yeah. No,
time.
I'm just going to stop sharing for a
That's
second.
just the answer to everything, guys. Let's just charge more, okay?
Yeah. I mean, yes.
Love it. Let's see
Failing
it.
most of these categories. Um, oh,
Yeah, you
dealing with
got
a professional accounting firm. Skylar, what question do you want me to answer first?
No, that's great.
Casey?
Yeah, I'll just read it out just in case
Mhm.
for YouTube they won't be able to see all the chat. So I'll just read it out so that they can kind of get some context here.
Mhm.
So Skylar asks, what are a couple of red flags to know we may not be dealing with a professional accounting firm? So I guess how would you be able to, what are some indicators in your experience for somebody that's kind of faking it till they make it?
That's a great question. So I would. Sorry, I'm just going to move this over so I can see it. Figure here, make it. I will say it's a bit hard to tell, but you want to make sure they're good at communicating. I have found that a lot of accounting firms aren't the best at communicating, which means they're probably not being super proactive in general. So if you are trying to get in touch with them, even during the sales process, and it's very hard to get in touch with them, that probably is a red flag that they're not good at communicating overall. Also, if they don't do if they're just going to do tax returns alone, that's fine, but that's not really helping your business. I mean, it really it depends because off the front you don't really know if they're a good company. I work with a lot of accountants too; they all do good work, but making sure I would say making sure they communicate really really well, and they also help you understand things as best as they can. If that helps at all.
Yeah, no, that's good.
Yeah.
Yeah, and if their logo looks like it was made on Chat GPT, you might also caution.
Well, I know. Oh, I don't know. I know a lot of accountants that do that, so they're not the best at marketing.
That's all right. Sometimes that's what you can do. But
That's it.
so Jim sounds like he is just really looking for some general guidance. Jim said, I'm failing in most of these categories, which I'm sure there's several people here that could probably relate. Where should we start first? Give them a good next step.
Next step, you can book a call with my team. You should know. You should
Which,
sign
by
an
the way,
accounting. Yeah.
let me go ahead and do this. So I'm going to go into two things. I'm going to put two links in the chat here. I'm going to put their link to their website, levelaccountingfirm.com. Let me know if that's not the link you want me to give, Erin. I think that's the link that should go
That's
straight to
good.
you.
That's good. That's cool.
And then I'm going to, for all of you JobTread users, as I'm sure most of you are, you have their tile in our marketplace where you can actually fill out their form, sign up to sort of start the relationship with them, give them some information there. But that's going to be pre-filled for you in JobTread. So that's really helpful. It will pull from your information and then you can edit it from there. But make sure you're checking those two links if you're looking for a good first place to start, because they are a marketplace accounting partner. We would love for you to be able to use those. Okay, so let's see. So Jim, you got that answer. George.
And Jim, I can give you that. We can give you that KPI tracking, and just there's instructions in there. Just start tracking some basic stuff. Just try with like two a week or month. Yeah. How do you track and measure your weekly gross profit? That should probably be a monthly thing that you should be doing, not weekly.
Love it. And then Thomas said, if a if a GC should have 20 to 35 gross profit margin, what should the net profit be? Would it be 8 to 15%? Still even with lower gross profit margins compared to specialty trades? So a little bit of a nuanced question there.
I think that hopefully, I think they should be that. I think GCs run a bit leaner because they have a lot more, moving parts. They have a lot more overhead. Or if they have subs, they have less direct overhead. So that makes sense to me. I think there's other companies that could do a lot more. or could do a lot less. So, and let me see, even those, what should the net profit be? No, I think that's right. Does anybody else have any input on that?
Yeah, you guys jump into the chat. I did want to say while we're waiting to see if anybody has any comments. To Erin's point, there are a couple things that we build a lot of different tools to try and help you accomplish many different things in JobTread. But one of those things is to be able to track good information. And so, when it comes to CRM or it comes to understanding, some of the individual conditions of your jobs, we've given you the ability to create custom fields so that you can leverage the custom fields to gather good information like your lead source. So if you created a custom field at the customer level, you could give plenty of values for anything that you're investing money in. So if you do a billboard or a truck wrap or anything, when we go through our 101s, we'll show some of those custom fields. Then whenever you have a new customer come in and you ask what that front door is to your business, even on something like your web lead intake form, you could rename that field on the form, how did you hear about us? And give them the ability to select for you what that lead source is. And then you could use a data point like jobs closed against, and use those two data points, the different lead sources to see, how you're doing. Or, things like, I'm trying to think, what is it, lead score or types of jobs, right? So if you created a custom field for types of jobs that you do, and assign them to those jobs, you could then filter it by those types of jobs and see, based on the closing job amount, and those job types, kind of what jobs are higher selling jobs. We did have a couple other questions come in. Dimitri, she has not given me her resources yet because we usually do that at the end. So if you just grab that link, I'll also put it in the Facebook group tomorrow there. But if you guys go to that resources link, I think it's a link that you can click on and download. But I'll have her send me the, I have the slideshow. In fact, do you mind if I put the slideshow in there? Would you want to wait and kind of curate it a little bit, Erin?
Here. No, that's fine. That's fine.
Okay.
Take it.
Well, then I will.
Yeah,
I'll put
curated.
it in there. Yeah. Yeah.
Anything less I have to do with design or anything like that is better for everybody.
Love it. So I will go in here and I will put it in there right now. Let's see. So the other thing too that we had here is Benjamin.
Ben. Hey, Ben.
Yeah.
Benjamin. I see him all over Facebook.
Yeah, I'll let you read out the question if you want to, and I'll go ahead and pop that resource.
I'm sorry. That's right. You're reading that. So Benjamin wrote, my understanding is net profit is the ultimate goal. Gross just helps get there. As long as the net is healthy, all is good. Yeah. So almost. Yeah. I mean, yes. Net profit. Obviously, what you're making is ultimately great, but you definitely want to. I think gross profit helps get you there, though. So I just ran a side-by-side example. So if your gross margin, let's say, and you're grossing about $2 million in year one and it's 30%, then that gives you the net profit, like what overhead and all that stuff, of $200,000. But year two, I'm sorry, you have a gross margin of 22%. That's going to lead to a lower net profit. So your revenue went up, but your gross margin went down. So it does and it doesn't. I would definitely say you want your your margins to be higher. Then that all trickles down to lead to the bottom line, ultimately, if that makes sense. I would say for sure. Yeah. So I'm used to the meeting style. Everybody's agreeing and stuff like that. I can see those head shakes.
Yeah. Yeah, sorry, I was.
No, it's totally fine. Okay, and Tom Melinda says we need different daily logs. Oh, this is probably more of a you thing, Casey. They're essential for tracking labor materials.
We need different daily logs. They're essential for tracking labor materials. Unfortunately, there's only one. Gotcha. So you're looking for versions of daily logs. You know what, Tom? You're gonna love this. Because we are actually going to be implementing forms relatively soon. I will not give an exact date on that, but we are working to create the concept of forms in JobTread, specifically helpful for people that are going to need AIA style forms and different things. But the ability to kind of create your own forms will be introduced there. So hang with us. It's definitely coming. Can't wait for it. Yeah. Go ahead.
Sorry, I wanted to say Skylar posted in the chat. She would love to be able to track. Sorry if it's
No, jump for it.
you, Skylar. I don't. You if you oh my god, track sales cycles and timelines, and CRMs do that. But we're all just destroyed by the subscription services we need for apps and softwares. I actually totally agree with that. But doesn't JobTread do that?
Say that again. I didn't miss that last one.
Does JobTread track sales cycles and timelines?
So you can utilize data points to be able to do things like that. So we do have a good CRM training. What I would say is to reach out to your CRM because they're going to be able to walk you through some of those data points that you can create. I can give you a lot of answers, but what I'll say is what I do with training is not going to sort of match up with all of the use cases that they're going to have. So reach out to your CSM because they're going to have some really good information on how other people are using specific data points to help you track that. But yes, we definitely have, again, that's where custom fields really shine. Is that you can leverage them to be able to tell you things like some of the really cool dashboard tiles where you can sort of measure your sales cycles based on, when you started your process, when, the average job is sold from that date on. So yeah, there are definite data points that you can have.
I would say, Skylar, too, like you do all that stuff in JobTread, but if you want to just start super basic, if you have Claude or something, you can just have it whip you up a cute little spreadsheet real fast, and doesn't cost any extra users through Google Sheets. And it's just what I find is it's the discipline from the human being that actually has to go in and enter the data. So it's not necessarily the systems that fail; it's actually the person that fails because they're not doing it consistently.
Yeah. I did want to ask you real quick, the handout that you were talking about, do you have a unique handout that you wanted to give to me or share?
I do. I do. I just have to get it for you. I'll have to email everything tonight to you.
So I have that the PDF of her presentation already in the resources folder. So it should be accessible. I'm not sure how Zoom handles sort of, time sensitive. I've uploaded it. When does it show up for you if you're already in it? Go ahead and click on that resources link. I'll again put that in the Pro Spotlight post tomorrow in the JobTread Pros Facebook group, as well as then the description in the YouTube video. Okay, it's on there. Awesome. Okay,
super
perfect.
Cool.
Yeah. So, and the other thing too is make sure that you guys are clicking on those links before we get out of here so that you can connect with her in that PDF. However, I did notice that there's a QR code on one of the last slides that's going to be able to help you it'll take you straight there. It's there, but it just got a notification that user moved to trash. Okay, so I did the slide presentation so that, again, it's not weird in terms of like her presentation, you guys editing it and doing some stuff. So I put the PDF to it, so you guys should be able to access it there.
And I think I have access to it, so I'll give you this stuff.
Okay, perfect. But I do, Erin, want to thank you so much for jumping in. Thank you for being willing to share again.
Sure.
For all of you users out there, what I'm going to do is I'm going to, let me do this. I want to make sure that you guys are checking out our Connect website because the Connect conference is an incredible opportunity for you to meet other users, for you to meet our teams, to meet some incredible vendors and partners. Where you're going to be able to learn about resources that they have in the ecosystem around JobTread and just in the construction industry at large that can really help your business to succeed. But make sure, interesting stuff, Shame, I'm in the UK. I see that, Tom. Well, come on and see us, brother. Come on and see us.
Dallas is an international airport.
That's right. It is. It is. Although if you're in the UK, I may want to come see you because I'm a huge Arsenal FC fan, soccer team. So anyway, but again, Erin, thank you so much for being willing to both share at Connect and then here for our Pro Spotlight. Look forward to seeing you guys on the future. Make sure that you check out that resources link over the next day or two. We'll get those resources from Erin. And then make sure that you guys are checking back every couple weeks. We do have another Pro Spotlight in 2 weeks, actually. Nick Perret's going to be here to share, and you're going to want to hear what he has to say. But then go back and look at some of the existing ones that we have. Just a lot of great information. Make sure that you guys are engaging in the Facebook group and coming back here and asking good questions to our incredible Pro Spotlight presenters. We look forward to seeing you hopefully at Connect and to be able to see you in person at one of our events in the future. Thank you guys again so much. Erin, thank you again so much. Hope to see you guys in the near future. Have a fantastic rest of your day and a great rest of your week. We'll see you later, guys. Bye-bye.
Thanks. Bye.